The great thing about being an independent channel like Fired Up Wealth is we can create whatever content we want. We don't have some sponsor breathing down our neck, telling us what content to create, telling you what stocks to buy. Really, we're just making content that we think is beneficial and will help you be a better investor. And sometimes it's fun just to jump on the mic and just talk about what you really want to talk about. You know, completely unscripted, not thought out. And I do this quite often. But this video today, I'm basically just going to get on the mic, kind of raw and unedited. I'm going to go through 3 stocks that I think are possibilities as being buys now. And these are penny stocks. There's an asterisk to that, and I'll explain later. Really what's going on with the market today, we had CPI data come in a little bit hotter than expected. Now, when I say expected, that's the general market consensus. In Fired Up Wealth, we have been cautious, and we've been warning members, and we've been talking about on YouTube how back in late 2023, essentially the market got this idea that the Fed was going to cut rates 6 times in 2024. And although I am a long-term investor and I want that to happen, I think the market did get ahead of itself. And I've been warning people about chasing stocks, FOMO, especially on some of those lesser attractive names, those speculative type investments. Those are going to get hit the hardest anytime you have interest rate sensitivity. So you think of interest rate sensitive stocks that are, burning cash, right? They don't have any free cash flow. They're not profitable, no PE ratio, but there are a lot of names in that bucket. And so you have to be careful of how you're buying. And of course, we always talk about building a blueprint, buying stocks that make sense for you, that fits your long-term horizon and plans. Now, these stocks today, these 3 stocks, these are going to be names that are more speculative because they are penny stocks. 2 of the 3 basically are, and 1 is slightly above, and I'll explain as I go through. And what I did in Discord, I've been keeping the community up to date. Yesterday, I did chart day, explained that if CPI comes in hot, you could see a little bit of a sell-off. Now, if the Fed starts cutting rates, of course, you're going to see a lot of those higher risk assets, those speculative stocks, those interest rate sensitive stocks, they're going to go higher. The market tries to always be forward looking, thinking that, this is going to happen sooner, not later. And the Fed kind of backpedaled a little bit. I think a lot of it was the interpretation was maybe a little bit off, that Powell and the Fed was being really dovish, late 2023. I think part of it's that, and then part of it's just the market wanting to look past all the drama and the bear market we've had for, last year and a half or whatever. So market definitely got ahead of itself, especially in some specific names. The higher the quality of the name, though, the better it's holding up, and generally will hold up in this type of environment because investors can kind of look past and look to the future. When I say look past, like look past the narrative now and look into the future. So these 3 stocks, I'm going to go through them. I'm going to show some fundamentals, just some commentary, show you a chart. Again, this is unedited, unscripted, just me. This is just me just coming to you on a $200 webcam, sharing my thoughts about the stock market and a few stock picks. Here we go. And so this whole thing is not only about cutting rates in March, but also just how many times are the Fed, are they going to cut and how many times? The market was pricing in like 6. Well, what happens then if the Fed doesn't cut at all, or they cut two times or 3 times? It's just something to be aware of. Of course, I'm always optimistic. I'm a long-term investor. I'm thinking 5 years out. But if you are a shorter-term investor, a swing trader or a day trader or something like that, this is going to be really important. It's going to cause a lot of volatility in the short term. The big headline, of course, Bitcoin ETFs begin trading in the US. So cryptocurrency definitely is getting a pop from that, especially names like Ethereum. Bitcoin's actually pretty steady here at 45,880. So I think I did a video Tuesday. We were around 45,600. It pulled back closer to 45. Now it's closer to 46. Ethereum's had a big spike here recently at 2588. So there's definitely some momentum in some of that. So I need to stress to you that these are spec stocks, not something I'd go heavy on. They're high risk, high reward. A lot of times you think of spec, you're talking about, a 5 or 10x or a 0. Like these companies can go bankrupt. And this is a true penny stock. Anything $5 or less is going to be a penny stock. This is Planet Labs, ticker is PL. So just in case you're not familiar with what Planet is all about, it's a data company. We offer subscription services to our imagery and imagery products. We also offer platform and API for computer vision vision-based analytics. So we're talking about satellite imagery and software related, right? So this is a unique company in that sense. It kind of fits in that space exploration space. It was founded in 2010 by 3 NASA scientists, just good to know. Started trading December 8th, 2021. So this is going to be one of those names that, did those roller coasters, ups and downs. In case you're wondering what PBC is, so when you look up the stock, you're going to see PBC. So Planet is a public benefit corporation. Their purpose is to accelerate humanity toward a more sustainable, secure, and prosperous world. And that's by illuminating environmental and social change. All right. That's not the same as a B Corp. 600 full-time employees. This is a small company. So it says here today they have about 200 satellites in orbit, and this number does fluctuate. It says it captures over 25 terabytes of imagery every single day. So how does it make money? That's going to be a question, of course, you're going to want to know as an investor, potential investor. Planet is a data company. We offer subscription services to our imagery and imagery products like we talked about. So you can essentially buy licenses and you can have access to these satellite images. They serve more than 34,000 users, 700 customers, and 200 partners. And so you would use this for agriculture, government, commercial mapping, etc. This is a tiny company. Again, high risk. $55.4 million in revenue. That's going to be Q3 2024. Had about $315 million in cash and cash equivalents back then. Gross margin's not going to be like if you just look at a pure SaaS type software company, those are going to be much higher margins. Planet's sitting around 51.5%. So revenue growth driven by civil government and defense and intelligence markets. And you can see some of that here, some business highlights. So you think of ag tech, civil government, defense and intelligence, and more. So this just happened November of 2023. Planet successfully launched its first Pelican technology demonstration on SpaceX's Transporter 9 mission. The Planet team quickly established contact with all 37 satellites and began commissioning the new satellites to join its fleet of roughly 200 current on orbit. So earlier we looked at 200, this number 237 when you add them together. This launch marks a momentous milestone for the company, especially for Planet's next-gen high-resolution mission. Of course, in this type of environment, a stock like this is not going to be fashionable. And I want to stress again, this is high risk reward. It's a penny stock, treated as a spec stock, 10x or zero long-term investment. In the last year, it's down 56.87%. So I've warned people recently, don't go buy stuff that doesn't fit your blueprint, doesn't fit your portfolio, just because you don't want to pay higher prices for the stocks you have high conviction in. So definitely don't watch this video and just go out and say, I'm going to buy this because it's only $2. Also, another thing that I always want to stress on penny stocks, just because it's $2 a share, it doesn't mean you're getting more of a company. If you have 1,000 shares or a fraction of a share, 0.1 shares, if you invest $10,000 and it goes up 10%, you made it $1,000. And the number of shares, it's completely irrelevant. It makes it feel like you can buy more shares and that you're buying more of the company, but just remember that if you cut a pizza into 1,000 slices, it's still one pizza. We also talk about growth investing, how you've got 2 parts of the puzzle. You got quantitative analysis. That's going to be the factual data. That's going to be PE ratios, financials, very black and white. If you're a value investor, this is your focus. As a stock picker in growth, a big part of that equation is going to be qualitative analysis. In other words, intangibles, things that you can't necessarily measure with financials. And a lot of it's going to be about the story of what could happen. And that's why it's spec. And it is a lot riskier to invest in these type of names versus something that's already established. So you talk about that spectrum, of course, speculative into hyper growth, mature growth, DGIF, DGI, and income. This is going to be on the far left side as speculative. And it's one of the riskier names in the spec bucket. And you say, well, that doesn't sound all that great, Eric. You're not convincing me. Well, first of all, I'm not here to convince you to buy anything. I'm telling you what I like and what I'm buying for my portfolio. Again, I've got nobody telling me what I have to make and what I don't have to make. I'm just telling you what I'm looking at right now as potential picks for my spec basket. I've already built out my blueprint and my core. You know what I own. So if you're just start out investing, you might be buying a lot differently. So of course, you're going to look at profitability. Well, it's a growing company. It's spec. It's not profitable. So D minus, you can see the numbers on your screen. Growth, 22.45%. So that's not stellar, but it is actually better than if you look back a few quarters ago, it has improved. And I think there's room for a runway with this. Generally speaking with spec, you want to have a lot more growth. Like in Indy, you see 100%. Now, the difference with that is a lot of that growth, a lot of times is going to be from inorganic, mergers and acquisitions and things like that too. So you have to keep that in mind. So 22.45 4 or 5%. That's not stellar. Like to see it higher. We do have it ranked here as a B on Seeking Alpha. And of course, valuation, you don't have a PE ratio. So you look at things like EV to sales, you look at price to sales. So price to sales, 2.87. This is TTM. Price to book, 1.2. So the valuation is actually a B plus, and this is trading at $2.17 right now. So the market cap on Planet Labs, $624 million. The 52-week high was $5.18. 52-week low, $2.04. So we're getting pretty close to that 52-week low. Now looking at a max chart, this doesn't necessarily mean anything. Of course, you know, when it went public back here, it was actually up at $11.40. Would have been a terrible time to buy. And you can see it fell off a cliff and it slowly just grinded lower and lower and lower. You know, so at some point, this company either is going to go private, it's going to go bankrupt, or it's going to recover and the stock's going to go higher. And that's not a reason to buy a stock. It's, you know, it's down 78% all time. So you don't just go out and try to find dogs and say, hey, this stock's down 80% from its high, so it's a buy. That's never the case. But we have done a lot of homework in Discord on this, especially in the space channel. If you watched the Rocket Lab video on Tuesday, you know that we have a space exploration channel in Discord. You know, and I have to give credit to Derek. That was his idea to create that channel, and he's brought us a lot of information on stocks like Planet, like Rocket Lab. And just a quick tip, don't ever buy anything Logitech, because this thing keeps popping up and I've tried everything and I cannot get it to go away, and I can't even uninstall, and it's driving me insane. So looking at the chart, we know 204 was that previous low, and that just happened in October. So the recent sell-off, it's just grinded lower and lower and lower. And this is under all the moving averages. It certainly can always go lower. I think it's possible it retests that 204, maybe even goes under $2. You know, this previous S3, I think, is $1.92, something like that. If this does get below $2, I think it's an opportunity to nibble on it as spec. So the next one's Rocket Lab. And instead of going through all the fundamentals and everything like that, we just did all of that on Tuesday. So if you're interested in more, you know, learning more about Rocket Lab, there's a video that just came out. At the end of this video, when you're done watching this video, there'll be a card. You can go check it out. So this is trading at $5.14. As you know, a penny stock is $5 or less. So this is slightly higher than penny stock status, but it has been in penny stock status before. And I think it's possible it happens again. You know, so I was saying, if you don't own any Rocket Lab, you know, in the fives might not be a terrible area to nibble. For most of us in Discord, we've got, you know, cost basis in the fours, some of us even in the high threes. I prefer this stock really in the fours DCA. So at 513 or whatever, not a terrible place to maybe add a little bit, knowing you're going to hold it for long term and you're going to add more if it goes lower, dollar cost average. My preference would be if it came under $5, like say my first entry position might be something like $4.97. I would just buy one lot, knowing that if it does go lower, I'd be happy wanting to buy more. And again, with this is something that you want to focus on really for 2030 and beyond. And I would probably put Planet in the same category. It's really for long-term investors. We're talking 5 or more years out. Now, the third one's not technically a penny stock because it is $6.63. Although if you look at the 52-week range, this was down at $4.12 in the low. The high at $11.17. So a huge range there. This is another one, you know, all these stocks, they're not going to be profitable. They're going to be speculative investments. Now, this is actually up 58% in the past year. So it has done pretty well. Of course, everything matters in when you bought it. If you bought it at $11, well, then you're not quite as happy when it's $6.63 today. Now, I do own some of this. My cost basis is in the fives. I think it's $5.70 or something like that. I shared in Discord this morning, but I really do prefer this stock in the fives. So it might not come down below $5, a penny stock $5 or less, but if it gets in the fives, I think that's an attractive entry point for Navitas Semiconductor. So growth on this is going to be the most attractive of the three in terms of growth, you know, 99.65% growth. So very strong there. The question is, can they sustain that? How are earnings going to look here? We have earnings towards the end of February. Valuation, of course, again, don't have a PE ratio, but you can look at things like price to sales ratio, and that's not cheap, 17.56, and this is an F on the price of sales. Now, overall valuation grade is a B minus. And the reason for that, you look at something like price to book, 3.1. Now, what's interesting about this is Seeking Alpha is rating this an A+ on profitability. I think that this is off because if you really look at this, leveraged free cash flow margin is positive 132%. The rest of these numbers are not very attractive, right? So I would kind of ignore that. And really, if you look at these rankings, you know, Seeking Alpha analysts call it a buy at a 4, Wall Street a buy at 4.5. and then you got to hold here. So momentum's a D plus. I tell you guys all the time, I like to buy against the grain. So generally I don't like to buy when momentum's A plus. You do that if you're going to be a trader, like a swing trader or something like that. But if you're trying to invest long term, you're looking, trying to usually buy against the grain, buy it when no one else is trying to buy it. So momentum D plus. These other metrics are pretty good, even though it's technically not profitable. It is more of a speculative name, and it does have very strong growth. Now, this is something I've covered on the channel before, so I'm not going to do a deeper dive into the fundamentals. I'm just going to go right into a chart. All right, so we do chart day every single Wednesday. You probably know the story by now. When you see orange, that's a previous chart day. Yellow stays chart day. I'm just going to tell you what I think, just viewing the chart here. And if you do want to join us, we do chart day every single Wednesday live, Patreon Discord at 9 o'clock a.m. Eastern. And we do actually have a free trial that's going to be expiring very soon. So definitely check that out. You can go to patreon.com/firedupwealth. And a reminder, I'm not sponsored, so we're not getting paid to do videos or anything like that. No one's telling us what to make. Really, the members of the community are what sponsor this channel. It's what allows me to do this and to bring free content like this to YouTube. So your support is greatly appreciated. If you look at Navitas, ticker is NVTS, obviously down here 476 in October. A lot of these growth names, especially these speculative growth names, they kind of bottomed out, flushed out towards the end of October and then ripped up. And oftentimes when you see a strong rip, especially, you see this huge rip up here, generally you see a 50%, kind of pullback from that, right? Consolidation, a retracement of 50%. Well, it went even lower, and so if I just look at something like a trend line, which isn't terribly useful in a chart like this, but it kind of gives you an idea if it's trending higher, this is going to be maybe 515, something like that. It's certainly possible it gets in that level, especially if earnings are a miss or if, more macro data comes in negative. For me, this is a stock that I'd really want to target when it gets into the fives. So maybe $5.97. I might nibble an entry position and it might not get there. Those are just the levels that I like to look at and where I would buy. I do own this stock. My cost base is a little bit lower on this one, but I think if it comes kind of in this area, this is the area where I have dollar cost average. And I want to remind you guys again, all three of these are speculative names. They're high risk. They might not be for everybody. So use caution, treat them as speculative stocks, put them in your spec basket, 10X or 0. If you're new here, make sure you subscribe to the channel and click that bell for notifications. And if this video is helpful, drop me a like, drop me a comment. Have a great rest of your day. Take care.